Joining us, Mr. Vijay Valecha, CIO from Century Financial. Welcome, sir, and thank you for joining us on CNBC Arabia. Well, today, if we are to look after 4 subsequent sessions of decline, how can we read the American threat to impose sanctions on Russia and on the purchasers of Russian oil and the impact on India and other purchasers?
Well, we have seen one very clear stance on the 25% tariffs levied on India, that purchases coming from Russia and any other countries which will be purchasing heavy quantities from Russia will be tariffed on other goods, not on non-oil goods as well. And that implications on how many countries will be affected is still not known. But yes, it will be seen that a country like India might not get affected so much, but if these sanctions do affect the trade talks between US and China, then it could definitely be a much bigger cause of concern.
However, do you not believe that the markets that will be alternatives to India, what will they be heading to, especially if we are to look at China as a purchaser of Russian oil? To what extent do you believe this will counterbalance the situation between oil and between India and China when it comes to demand on Russian oil?
So when we look at the 25% tariffs levied on India, they don't really impact India as much because India's exports to the US account for less than 10% of the total exports of India. India could have different arenas for those exports. Half of those exports can be sent to the Europe and other places, and thus a much bigger deficit in the economy is not hit for India. However, the same cannot be said for China. China tariff deals are going on separate so far from the Russian oil talks, but you never know how the situation can turn. And well, it does look like it could be an ugly situation if we do see China also being accounted for with the Russian buying. Then that could lead to a mayhem not just in the oil market, but the spillover will definitely come into the equities and the bonds market alike.
However, sir, if we are to look at the oversupply for the market, especially with the expected increase in the supply by OPEC Plus in September, how can we actually read this and its impact on the oil prices amidst definitely this momentum and the uncertainties related to the tariffs?
That is exactly why we have seen oil coming down throughout this year. We have seen spikes coming in due to geopolitical tensions. We saw Brent oil going marginally towards 74 levels also just 2 weeks back, and then we have seen it coming down. The supply pressures are definitely increasing. The supply is increasing every month with the OPEC Plus meetings. We don't believe that September is the last increase of supply. There will be more increase in supplies coming from the OPEC Plus for the year going forward, and that will definitely put pressure. While the demand globally is increasing, there is expectations that there will be a 1.3 million barrels per day demand increase from next year. But that being said, it is being offset with the extra supply, and the extra supply is definitely putting a lot of pressure on the oil prices to move downwards.
However, if we are to look within the framework of the negotiations currently taking place between the US and its trade partners, there was, of course, one point that is related to the oil purchases, and this was actually a condition on the EU. Do you believe that currently the tendency for purchasing oil, this was as well a point in the discussions with South Korea, to what extent this will actually change the world map on demand, especially when it comes to having a larger demand from the US?
It definitely does look like a lot of relationships over the last 4 or 5 decades will be tested during these tariff wars. The tariff wars will not just be a tariff war between every country and USA. It will also be a tariff negotiation that every country will have with other partners of theirs as well. So this is, I think, just the start of the surface, and every country will then have to renegotiate their trading terms with other countries, and the ripple effect will definitely go on. This impact will come in not just from India and China, but rest of the world as well. Every smallest of country will get impacted with the tariffs, whether in a positive direction or in a negative direction. There definitely will be trading partners changing, and definitely the flow of goods the map will be quite different in the next year.
I would like to thank you, Mr. Vijay Valecha, CIO at Century Financial. Thank you very much for joining us.
Thank you so much.